In today's video, I'm going to show you how to build an Iron Condor trade using the Thinkorswim platform. So I'm going to use the symbol SPY. And you come over here, you're on the Analyze tab. If you were on charts, you would have to click on Analyze tab and then Add Simulated Trade. I'm building this trade just so I can use the Thinkorswim Risk Graph Analyzer. You can also then place the trade, which I'll show you after we build the trade. But you can use this platform just to analyze your trades, and you can even trade from another platform. So you don't have to place the trade here. You can just build it to analyze it, and that's what I wind up doing, and I'm going to show you how to do that now. So I go to Add Simulated Trades, and notice how for SPY, there's so many different weeklies nowadays. If you actually know that you only want to trade the monthlies, you could come up here to Expiration Types and click on that. And down here where it says Expiration Types, you could eliminate the weeklies and just have regular. And then the quarterlies would be the last day of the month 4 times a year as well. But if I leave just regular checked and exit back, notice that I only have the monthly expirations: April, May, June, July. And there's still quite a few because they go all the way up a year or two out for some of them. So in this case, I'm looking to do an Iron Condor that's 34 days out on the monthly, May 19th. So if I click there, and I'm doing a low probability Iron Condor, so I usually like to sell the Delta 30 option. That's my starting point. So I come over here to Delta, and I see that the 227 is the Delta 30 option. So I'm going to left click on that, and it builds just the one position. I could build this in 4 separate legs if I wanted, or I can make it in 2 credit spreads where I see how much credit I'm getting for the put side and how much I'm getting for the call side. Or I could build it all as one unit and just get the price for the Iron Condor. Now I'll show you how to do both of those. My preference is to build the 2 credit spreads so I can see what credit I'm getting for each part. But let me show you the difference. So I've already put a single option down here for the 227 put. If I now hit the Control key, and let's say I want to do $2 wide. So since I don't have the strike that I need right now, let me just come up here and change this to, let's say, 30. And I'm going to buy the 225. So if I hit the Control key and then left click on that, notice how it gave me a vertical spread, the 227, 225 put. And the price that they're putting in this box is the mid price of what the spread would be based on the center price of the 225s and the center price of the 227s. Now with SPY, there's not that much between the bid and the ask, but with other symbols, if you were doing it with a stock, the amount of the difference between the bid and the ask could be quite a lot. And if you're doing this after hours as a test to see what the position might be worth, the spread could widen to a point where you may not get a value that will depict what the real value will be when the market opens. So you will have to get used to whatever symbol you're using, especially if you're using a stock where there's less open interest and the bid-ask spread is wider. So now that I have the 1 credit spread down, I have the put credit spread, I can come down here and look for the Delta 30 option for the call side. So here I am at the 237. I'll left click, and then I come down to the 239 and hit my Control key again and left click on the 239, and notice how it built the 2 credit spreads separately. They're shown as 2 verticals, and I can now come up here to my risk profile and see that I have an Iron Condor trade. Now with a low probability Iron Condor, since I'm using the May 19th expiration, normally the 1 standard deviation move will exceed the extent of the wings of the Condor, and that's normal. So I'm going to change this date just to show you what that looks like. If I put the expiration up here at May 19th, and then I drag this in so I can see the 1 standard deviation move on both sides, you can see that my short strikes are way in here, 227 and 237, but the expected move right now is substantially higher than that. So if that amount is too much for you at this time where you are concerned about having to manage this trade, then you may want to wait until the conditions were a little better. Perhaps you would get more credit, or maybe you would put the put side on a down move if we're range bound, and then put the call side on an up move. This way you can widen the wings of your Iron Condor, or you can manage it where as it's starting to attack or before it gets too far to one side, you make some type of an adjustment that will smooth out your risk graph and take away some of the risk on the side that's being attacked. If I wanted to build this as a one unit, so I'll go to the 227 again and left click. And now I'm going to hold the control key down for all the other three legs. I'm going to buy the 225. And then I'm going to come over to the 237 call. And I'm going to left click on the sell. And then I'm going to click on the 239. And notice how it has now changed to an Iron Condor down here. Once I clicked all four legs after holding the control key. Now you don't hold the control key for the first leg that you're putting down. If you held the control key down, it would add that leg to your other position and it would modify what that one looked like, which was the vertical. But for the first leg that you're putting down, you just click on it with your left mouse. And then after that, it's all left mouse clicks, but you're holding the control key down, and that allows you to see the whole trade as one. And notice here it's giving me a $1.09 credit. And when I did them separately, it came out pretty close to that. It came out to a $1.08. So it's just in the way that it averaged all the mid price that this one came out to a penny more credit. Now, if you were putting the trade on all at one time, you could then come over here and right click and then hit confirm and send. And you just verify that you have the right number of contracts, that your strikes are right, and that your credit is okay, that what you expected, making sure that all of that's all right, and then you would hit send. Now, if you wanted to try and leg into the trade, then it's advantageous to have the two positions built separately so that you can put one on perhaps on a down move intraday and then maybe the other one on an up move intraday, perhaps even a different day. So you leg into the position where you're trying to expand the wings. Now, when you do the legging in, it is possible that you'll get a move in one direction that will keep going in one direction, and then you would have to manage it like a credit spread to keep yourself from losing more than you expected on the trade. So when you do decide that you're ready for legging into the trade to try and help yourself have a wider Iron Condor, just realize that if you do get a large move in that one direction where you put the credit spread on, then you're going to have a little more risk on the trade on the side, that's under attack because you didn't get the call side on. Now, if I want to build the closing trade here for the Iron Condor just to see what the current price is, I can come up here anywhere in my Iron Condor trade and right click here and click Analyze Opposite Trade. And when I do that, it builds the closing trade for me, and it'll give me a way of seeing what the current price is. Now, right now, notice that it's right at the same price. So I'm going to uncheck these, and I'll just show you the Iron Condor. So the sold Iron Condor here is checked. And notice that it's the same picture that I had before when I just did the two separate credit spreads. Now, if you wanted to have the values of the two separate credit spreads down there for yourself, you could also just right click on these and put Analyze Opposite Trade and just uncheck them. And do that for the other one. This way, if you wanted to monitor what the current price is for either side, you can do that. And then you can either use the scroll button to scroll if you want to leave your risk picture, where you're down here where you see a bit of bigger picture. You can then scroll through your positions here, or you can leave this up higher where then you have access to everything that you're looking at here. So that's a personal preference of yours. So this is how you would just build the trade if you wanted to do it as two separate credit spreads or as a complete Iron Condor, as I've shown. And you work with that a little bit and decide which you're most comfortable with. And I hope this helped you.